Hello everyone out there, how are you all doing? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with fantastic hints and tips. Stay tuned today for all your latest property news. Now, the recent CoreLogic Home Value Index highlights a deceleration in Australia's housing market. November 24 saw national dwelling values grow by just 0.1%, marking the weakest increase since January 23. This slowing momentum indicates the near end of the upswing that dominated much of 23 and early 24. Regional markets experienced stagnation or decline, while capital cities like Sydney and Melbourne recorded only slight gains. Key factors influencing this trend include high interest rates, a lack of real quality property listings still, worsening affordability, limiting buyer capacity and activity. Borrowing costs have increased significantly, of course, with mortgage repayments, burdens reaching record highs, particularly in high-value urban markets. The slowdown is further attributed to a pullback in demand following rapid price rises earlier in the year. Despite these challenges, a few smaller capitals like Brisbane, Adelaide, and even still Perth have maintained resilience, partly due to their comparative affordability and population growth. However, these cities also show signs of moderation. CoreLogic's data underscores the increasing caution among buyers and sellers as the market adapts to a higher rate environment and tighter economic conditions. Unless economic conditions and listing numbers shift significantly, this subdued growth trend is likely to persist into 2025. Now, property prices in Australia, as we've seen, are showing signs of slowing growth, but investor confidence remains robust, according to the Australian Property Investor magazine's September quarter survey. Over 81% of respondents expect property values to rise in the next year, a significant improvement compared to 2.5 years ago, when less than 30% were optimistic. Regional markets also exhibit strong confidence, with 64% predicting price increases, the second highest confidence levels recorded in 9 quarters. Investors' top market preferences for the next 12 months include Queensland 27%, Victoria 25%, New South Wales 24%, Western Australia 13%, South Australia 7%, Northern Territories 2%, Tasmania 1%, and the ACT 1%. What fascinates me among these figures particularly is Victoria in second position, with 25% of investors choosing this state as their market preference. Given all the legislative changes that have been happening down there, they've been doing everything to put investors off. This really shows that among very savvy investors, this state still shows its fundamental promise. I agree. Housing affordability in Australia has reached historic lows, as detailed in the latest ANZ CoreLogic report. Over the past year to September, median household incomes increased by 2.8%, median incomes to $101,000, but property prices surged by 8.5%, elevating the median dwelling value to $807,000. This growth pushed the dwelling value to income ratio to a record 8, far above the 20-year average of 6.7. First home buyers now need 10.6 years to save a 20% deposit, assuming they save 15% of their income. High interest rates mean that mortgage repayments consume over half of household incomes. In response, buyers are adopting strategies such as purchasing below the median price, using smaller deposits with lender's mortgage insurance, increasing deposit sizes to minimize the debt, and seeking family financial help. Despite challenges, the market remains resilient, with continued investor activity and evolving buyer approaches. Australia's property market in 2025 is projected to deliver mixed results, according to SQM Research's Housing Boom and Bust report. National price growth could reach 4% under the base scenario, with Perth leading the way. Brisbane, Adelaide, and Darwin, according to the report, are also set to outperform. However, Sydney, Melbourne, Canberra could experience price decline, with Canberra seeing drops of up to 6%. Key influences include anticipated rate cuts in mid-25, robust population growth exceeding 500,000, and manageable inflation. Now, all of those would normally be signs to me of an increasing property market. In an optimistic scenario, earlier rate cuts might push growth up to 10%, while a pessimistic view with no rate cuts could result in declines of up to 4%. Market moderation is evident though, longer selling times and increased property listings providing buyers with more options. I don't know where we're seeing those because I'm not, but that is according to the report. Affordability concerns and evolving dynamics continue to shape the landscape for buyers and for sellers. I will keep you posted, as always, on all things property from around Australia as the year progresses. Now, don't forget to hit the subscribe and like buttons if you are enjoying the free content, and I will see you all again very, very soon. Bye.